So we don't do a lot of development internally. I will say that a lot of those projects, and we see that more on our consulting business side, are really getting put on the shelf now just because of the impact of cost of capital. So most development deals use floating rate debt, and then once they establish that property, it's able to start collecting rent, then they'll put on some kind of permanent fixed rate financing. But this floating rate environment is, interest rates have gone up 5%. You've gone from, I could get a floating rate loan in the threes to 7-8% now. So a lot of those deals that were planned have just not moved forward. So if they've already broken ground, they've already started on the project, obviously they're going to finish it. They might not make quite what they thought they were going to make, but they'll get done. But I would say a huge portion of the deals that were still in that planning stage and hadn't actually committed to capital yet are currently on hold. On like a multifamily apartment that's well established, and they're looking at CapEx projects and are just what their budgets are for the next year. We have a sister company that we actually do benchmarking, and we get very specific into their market. So we use census data, geotag. You can get a benchmark. You can see 5-6 assets in your geographic area of other multifamily assets, and then we split that P&L down into it's kind of the CREFC. I don't know if you guys are familiar with that CREFC format, standard format, rents, your payrolls, your property taxes, all of those different line items. And you get to see your asset against effectively your peers. And we're generally seeing, and it is market specific, but like 7-8% increases in a lot of those expenses year over year. But it helps the owner determine where do they need to focus. So us internally running some of these benchmarks, we've noticed that our insurance is high. So as we're preparing for 2024, we're looking to other brokers. We're looking at other ways. Do we need to tweak our premiums a little bit? Maybe step our coverage down a little bit to lower some of that cost.